You are listening to ChartingWealth.com, our daily market review for Thursday, the 7th of May, 2015. We are looking at IYY, the total market. Here's what it's been doing over the last 8 days. We're looking at 2-day trend lines. That's the way we always open our review. This is our 2-day trend line, and these are our 2-day charts. So each one of these candles, that's what we call these, represents 2 days. Green candles are up movements, red candles are down movements. And of course, what we see ending on the 6th of May is we see a down movement. We see actually a trend line we started drawing going down starting on the 28th, which was the last up day. And we have a little bit of an up day on the 4th of May, but that's really a spinning top, maybe a doji almost. But we have continued down movement in the market. We had a crossover going down on the 30th, the last day of April. Now, of course, if you read the Stock Traders Almanac for 2015, it comes out every year by Jeff Hirsch and his dad, Yale Hirsch. Would recommend that you always purchase that at the beginning, at the end of every year, so you have it for the next year. If you don't have one for 2015, you need to go ahead and buy one. You can get one at Amazon, or you can get one at their website, Stock Traders Almanac. You can go there, just search that on the web, and you can find it. You can get it at a discount this time of year because you're already several months into the year. But what we're looking at here for IYY over the last few days, the reason I mentioned Stock Traders Almanac is it tells us historically, cyclically, the good 6 months end with the month of April. Those of you who've been in the stock market very long know and have heard sell in May and go away. Well, check this out. We're starting in May right here. Had a nice run up in the market up until when? Right at the end of April, beginning of May. Now we have down movements. That doesn't mean it's going to go down all summer. It means that the big money gets out of the market in the summertime. Typically, people go on vacation, and the market loses a lot of volume. So what happens is it gets choppy and hard to chart. It's hard to make money and know which way the market's going. If we go back for you and we look at the stock charts over the last several, the good months, what do you see? Nice clean movements up, nice clean movements down, nice clean movements up, nice clean movements down, nice clean movements up, nice clean movements down. Why do I say that? Because if you are simply someone who, say you have an account with TD Ameritrade or Charles Schwab, and you can enter into and out of things like a total market fund or the S&P, and you can chart that easily, what does that mean you can do? It means you can get up, say here, ride the market up to say here, and get out and let the market go down. Then you can buy back in, say here, ride the market up to say here, get out, let the market go down, and then ride the market back up. What does that allow you to do? It allows you to make money in the up movements and not lose money in the down movements. Make money in the up movements, not lose money in the down movements. And the beautiful thing is, if you get out and the market still turns around and goes up further, yes, you've lost a potential gain, but it's not even cost you a transaction fee if your broker has funds that you can enter into and out of at no commission. Isn't that beautiful? Sort of changes the game. Something to just think about. Again, we don't give advice here. We just talk about what I see going on in the market. No advice. We are not calling trades or giving you any advice. We're just talking about investing. So let's look at what happened IYY. Again, back on between the 28th and the 30th, we saw a crossover going down on the MACD, the moving average convergence divergence. That's what this is over here on the left side of the screen. Derivative oscillator crossed over in the last 2 days, and a huge down move pushed back up by the bulls, pushed down by the bears, ended down some today. In fact, down 0.25%. So 0.25%, a very, very small down move. Again, if you look at the move over here just a few days ago, ending on the 30th, it was about the same. Went up a little bit in the interim around the 4th and then back down, ending on the 6th. So as you see the market open on Thursday, you should realize that it has been in a downtrend for going on 8 days now. Now let's go over to the SPY. What do we see in the SPY? Well, we're on the 2-day chart there. We have drawn a trend line for you, and we see, of course, a crossover going down between the 4th and the 6th. Again, very similar to the IYY, a lot of down movement and then pushed back up by the bulls. And let's break that down a little further to the 4-hour chart. Look at that. A nice track going down. Whenever you see the 4-hour chart trending going down along with the 2-day chart, again, you have both of your waves, your smaller wave, your half-day wave, which is the 4-hour chart, and the 2-day wave, the bigger wave, both going down. You can feel much more comfortable about either being out of the market if you've sold your position in SPY. If you were in the Standard & Poor 500 index, this is an ETF, exchange traded fund. Like I said, if you're big with a big brokerage firm, you can probably get in and out of that at no cost. You need to check, something for you to think about. So what we see right here is it appears, well, that as far as our trend line goes and what we've drawn, this is only over a 6-day period. It is a down movement, crossover going down here just in the last 2 days. Now, let's go to my favorite chart. We're going to the 2-day chart on the Qs. That is the QQQ. They call it the cubes also. It is the NASDAQ 100. And we have, again, a 2-day trend line. It is connecting close to 3 different candles. We always want to connect 3 candles. Again, same kind of crossover going down on the Qs like we saw on the S&P 500. And what do we see? Well, we see a down movement. We see the derivative oscillator, not crossed over yet, but looks like it's getting close. Let's switch over and see our 4-hour chart. What do we see? Yes, 1, 2, 3, 4, 5. We see 5 down candles. We're below the 2-day trend line. Our derivative oscillator saw a crossing over way back on the 29th. So we appear to be in a down move on the Qs also. Lastly, where do we always look? We go to gold. It's the only commodity that we look at, and it is always an interesting one. We have drawn this trend line. Even though the trend has not crossed over, it is still technically, because of this cross back here on the 2-day chart, in an up move. Here's the problem that you'll see at times with the MACD, our favorite indicator. When you have a market that's trending sideways, not really going up, not really going down, the MACD is not that good an indicator. Look at it. It's still in an up move, but what's the market doing according to our trend line? It's going down. Why do we like trend lines? Because they help us see what's really going on. Look all the way back here on the 6th of April. We are right at the 6th of April right now, at the bottom of that move up at 114.48. At the 6th of April, we had the market reach a high of 117.47. It closed at 116.99, right at 117. We are still at the bottom of that candle in an up move since that time. What does that tell you? The MACD is not telling us a lot right now. Where's the market? It just doesn't have a lot of legs in gold. Gold is just not doing much at all. The derivative oscillator switched over going down back on the 24th of April. Still down, not a lot. We would love to see this, and again, the moving average convergence, divergence. When you start getting a divergence, like you see in here, that's telling you, hey, we've got some uptrending going on, particularly when that's coupled with a derivative oscillator. Well, what do we have now? A negative derivative oscillator, and we have a converging or very, very close blue and red lines on the MACD. Not a lot going on in gold right now. Let's try to take a closer look by ranging back to the 4-hour chart. What do we see? Well, again, we see the movement staying below. This is the 2-day trend line going down, so the movement's below that. It went up and touched it, and then looks like it's staying away from it, although it did cross over going up right in here. On the MACD, the derivative oscillator could be switching over, but again, this is our small chart. Our big chart is, of course, still in an up move. We'll continue to watch and see what goes on, but not a lot happening in gold. So that's where our markets closed on Wednesday. As we go into Thursday, continue to watch the markets. Do be aware, if you are a follower like I am of the Stock Market Almanac, tomorrow, just like today and Tuesday, is a bear day, historically down. So again, I urge you to get a copy of the Stock Traders Almanac if you don't have one. Great resource. I use it all the time. Thanks so much for listening. We appreciate you joining us for chartingwealth.com. And again, this was our market review for Thursday, the 7th of May, 2015. Good trading, great investing. We wish you always